Hi, this is Zak Mir with a look at some of my favorite oil and gas stocks, starting off with Gulf Keystone, where there's been a rising trend channel in place on the daily chart since April, when the CEO decided to get rid of most of his shares. Since then, we've had a decent recovery, but the support zone around the low 60s is currently looking slightly ropey. We've got the 200-day moving average falling through £1.72. Initial double support around 164, 163, but we really need to hold above that level on an end of day close basis to avoid the whole setup here of a bull trap gap to the upside and then a failure not becoming a cue to drive the shares back towards 130 again. Ideally, you want to see the RSI back above 50 versus 43 at the moment, or even an end of day close above the 50-day moving average at £1.86, which is probably my personal preferred entry trigger. End of day close above the 50-day moving average should take the shares back up to the top of the channel and £2.30. So really, it's probably worth waiting for the stock to deliver the break of the 50-day line rather than getting involved in this sort of horrible gyration either side of the 200-day moving average, which could go on for days or even weeks in its current form. Slightly better situation here at Xcite Energy, where we've got this consolidation between 110 and 120 over the past month. My view and my hope, I suppose, is that the shares have actually broken above this resistance line from March. They will not go back below £1.10, which is the position of the line at the moment, and especially not below the floor of a rising trend channel from the start of the year, which is running level with the 200-day moving average at 107 pence. So basically, absolute stop loss just below the 200-day moving average, and ideally no break back below £1.10 will lead the shares back up to £1.40 plus over the next few weeks. If you don't like that sort of setup, probably just wait for the end of day close above £1.20, although I suppose that would be such an obvious buy trigger that the shares there's a risk of missing that. The shares may fly too fast. Finally, going on to Bowleven. Here, a very tricky situation over recent weeks. It's a sort of slow sell over the past, well, really since the rally at the start of the year, where we saw 100 pence plus. We've retraced much of those gains, and really are still struggling to find a floor. But I think that it's probably worth at least having the shares on your radar as a potential bottom fish situation. There is a rising June RSI support line running through around the 35 level, and we also have the backing of a mildly rising trend channel from July around the sort of 55, 56 pence level at the moment. Probably the easiest way here is actually to wait for a weekly close above last month's resistance, which was around 63 pence. You could go for a break back above the 50-day moving average at 60 pence as your entry point, but as we've seen, we've had no less than 4 or 5 false breaks through the 50-day line in the recent past. So really, a higher high is what we're looking for, either at 60 pence or say 65 pence to be safe, and then take the shares back up to the top of the post-July range at 70 pence initially, but obviously looking for much more, given the way that really you would have thought that after such a long time the stock is ready to sort of fulfill the potential of say this resistance line from 2012, 100 plus, for 2014. That's it for me. See you again next time.